Good morning, everyone, and it is my pleasure this morning to welcome you to the second of our stakeholder consultations on the Eastern Caribbean Securities Market CDB project on crowdfunding. Before we get into the presentations for today, I will provide some background and context for what we intend to do today during this meeting. On the 19th of October 2001, a formal regional securities market for the ECCU was launched. The market is governed by common securities legislation, which is passed in each of the 8 participating member countries of the subregion. That date also marked the birth of the Eastern Caribbean Securities Regulatory Commission, a regional regulatory body charged with ensuring compliance with the securities legislation so as to protect investors in securities. The launch of the market was the achievement of another important milestone in the subregion's capital market project. The Eastern Caribbean Securities Market is expected to contribute to the economic development of the subregion as it has the capacity to provide the users of capital with an alternate source, lower cost source of funding, and the owners of capital with more opportunities to manage wealth. Permit me to borrow a few lines from the ECSRC chairman's statement to mark the 20th anniversary of the establishment of the ECSM on the 19th of October 2021. And in his speech, he quoted from our late governor of the ECCB, Sir Kate White-Fenner, who 20 years earlier, or almost 21 years now earlier, at the start of the ECSM stated, "The establishment of the Eastern Caribbean Securities Exchange will go down in our history as one of those fundamental shifts in social and economic arrangements that are defined in terms of the before and the after. This institution will have an impact on our laws, on our enterprises, on how these enterprises will be financed, and who will own our enterprises. It will have an impact on the distribution of incomes and on the relationship between workers and employers. It will have an impact on and will be impacted upon by the air transportation and telecommunications industries." What is clear from this statement is that the advent of the ECSM was meant to usher in a new economic era, ripe with opportunities and possibilities for the countries and the people of the ECCU region. The hope was that the ECSE and the ECSM would serve as an opening to greater participation and inclusiveness in our economic systems, both within each member country and across the currency union. As more persons become involved in owning shares and other types of securities, they would feel that they have a greater stake in our economies and societies. Companies, too, are now afforded another avenue for raising capital to expand their operations. Consistent with this vision and in recognition of the challenges faced by micro, small, and medium-sized enterprises, MSMEs, in accessing finance, and the positive impact that these entities can have in promoting the economic development of our countries and the region, the ECSRC, as part of its market development mandates, is seeking to create an environment that would offer MSMEs the option of raising capital on the ECSM as an alternative to traditional financing. Therefore, with funding from the Caribbean Development Bank through its Caribbean Technological Consultancy Services, CTCS, the ECSRC is working on a project to implement a regulatory framework to promote crowdfunding in the Eastern Caribbean Securities Market, ECSM. The main objectives of the project are to enhance the regulatory framework for non-traditional sources of finance for ECCU member countries and increase access to finance for MSMEs by facilitating the development of an equity crowdfunding platform in the ECCU. The project consists of 3 components, and I will touch on each in summary. The first is the validation of the draft crowdfunding policy framework that has been developed by the ECSRC in collaboration with our consultants. And this process is part of what we're doing here today. And it involves stakeholder consultations, which started yesterday and will continue until tomorrow, where we present the draft crowdfunding rules developed by the ECSRC with assistance from our consultants to receive feedback on these rules to improve and or enhance them, and to revise them based on the feedback that we've received. The second component will be the sensitization of crowdfunding stakeholders. And we intend to hold a series of sensitization and training sessions to educate entrepreneurs, investors, investment advisors, and other key groups about equity crowdfunding and equity investment. And the goal is to build interest in and demand for equity funding and support for crowdfunding in the ECCU member countries. And the third aspect of the project will be the testing of crowdfunding platforms through the ECSRC regulatory sandbox. We believe that this product testing will assist the ECSRC to better understand the operations of the platforms and the type of processes and procedures that might need to be implemented in order to protect investors and promote and maintain the integrity of the market. The key performance indicators that we hope to come out of this project is that there will be awareness raising for at least 300 stakeholders. At least 150 entrepreneurs will be trained in crowdfunding and equity investing, of which at least 30% would be women. At least 75 prospective investors trained in crowdfunding and equity investing, and 5 investment advisors trained in crowdfunding, and at least 2 MSMEs participating in the regulatory sandbox as part of the crowdfunding platform. Fundamentally, from the ECSRC's perspective, the success of this project would be demonstrated in an increase in financial literacy and knowledge of the operations of the capital markets among the general populace in the ECCU member countries. And we hope that this would spur interest and participation in the ECSM, not just by individual investors, but from persons in the region and companies that will be developed from the stage where they are to where they will be able to list on their shares on the ECSM. At this point, I would like to take this opportunity to thank the CDB CTCS for its ongoing support, and to our 3 consultants, Dr. Winsome Leslie of Dev Solutions Consulting, Mr. Thomas Ward, and Matthew Render of Mosaic, a digital marketing agency operating in St. Lucia, who have demonstrated unwavering commitment in working with us on this project when we started about 3 to 4 months ago. Matthew has been working behind the scenes to raise awareness and marketing the project. And many of you would have visited the website, the mini website developed for this project. Dr. Leslie is also assisting with awareness raising and training, and Tom Ward is the technical advisor on the project. Dr. Leslie and Tom are our presenters today and will also be facilitating your questions. By way of background, Dr. Winsome Leslie is an international development specialist and a certified business advisor with over 2 decades of experience in MSME development. She is currently president and CEO of Dev Solutions Consulting. This firm provides advisory, training, and project development services in entrepreneurship and MSME development to business intermediaries in the US and frontier markets, with a focus on access to finance. And Mr. Tom Ward is the technical consultant on this project. He has spent over 12 years with the UK's Financial Conduct Authority, leading on the implementation of many policy initiatives, including the UK's implementation of MiFID II and evaluating the UK's approach to crowdfunding. Most recently, he established and led the FCA's Regulatory Sandbox initiative, seeking to encourage responsible innovation in financial services. He has also worked for the University of Cambridge's Centre for Alternative Finance, working with and advising policymakers and regulators around the world on regulatory approaches to new and emerging business models and technologies, as well as initiatives promoting financial innovation. Once again, it is my pleasure to welcome you to the second in our series of stakeholder consultations on the draft ECSRC rules for crowdfunding, and we look forward to your full participation. Before I hand over to the presenters, just to let you know that please hold your questions until the end of the presentations, and you may also use the chat to place your questions. If you have any questions during the presentations, you can place these in the chat and we will get to them at the end of the presentation. Thank you very much, and I now turn over to Dr. Leslie.
Thank you so much, Alusha. It's really great to be here, and I'm very excited to see so many folks in this meeting. It signals a very good interest and a very high level of interest in the project. I'm going to share my screen. Let me know when you are seeing it.
Yes, we can see now.
Okay, so I'm going to start off by talking a little bit about crowdfunding. I'm going to touch very briefly on the project that Alusha mentioned earlier. And then I'm going to turn over to my colleague, Tom, who will then talk a little bit about the rules, give you an overview, and zero in on the specifics that deal with entrepreneurs from the issues and challenges and questions you might have around crowdfunding. Okay, so what's crowdfunding? It's basically raising money for a project or a business from the crowd or the public via either a regulated financial intermediary or in some instances, an investment broker. For the purposes of this project, we're talking specifically about an online platform. Now, there are different kinds of crowdfunding, ranging from donation to equity crowdfunding. So let me start at the beginning. In terms of donation, we're looking at individuals raising money for a project or even their business from individuals who will provide the funding without expecting any kind of return. So usually institutions use this kind of approach. They are usually NGOs or individuals who need to raise funds for school or emergencies, etc. And I'm sure many of you might have heard of GoFundMe in the US where I sit. And this is a typical example of this kind of crowdfunding. Then we have reward crowdfunding, which is a step beyond donation. Here, this is used usually by companies who are launching a new product or service, and they need funding to actually produce the product or prepare to launch a service. And in return, they'll provide a free service or a free version of the product to their funders. Then we have two kinds of crowdfunding that from the perspective of the donor or the funder might be a bit more risky. The first is debt crowdfunding, which is also known as peer-to-peer lending if it's between individuals, or peer-to-business lending if it's between an individual and a business. And here, an example of this is Kiva in the United States, where small loans are being provided by the public. And in exchange, of course, you're getting that money back with interest. The benefit here is that the interest rate is much lower than conventional loans that you get from a commercial bank. And then finally, we have equity crowdfunding, which is focusing on this project. And here funding is being provided by individuals via a platform or a broker in exchange for ownership in that company. In other words, in exchange for stocks or shares. Now, I just wanted to highlight the crowdfunding process to give you a sense of how it works. So you have the crowd or the public being pledging funds to what we call campaigns that are being posted by the small businesses on a crowdfunding platform. The funds are going obviously to the companies, and the companies are putting together a campaign. Now, what do I mean by that? It could be considered a pitch in the sense that you're presenting your company to the public to generate interest in supporting through funding. It would mean that you have to put together an offering document, including perhaps a video. You have to produce financials that show the state of the company now and projections in terms of where you want to take the company in the future. And in exchange for posting these campaigns on the platform and requesting, obviously, the amount of money you want to raise, when these funds are pledged, the funders will get either a reward or a loan repayment with interest or shares. Now let's talk a little bit about equity crowdfunding. I wanted to just highlight here the key players in the ecosystem. Each of these players or stakeholders has a key role to play in the way the system works. So let me start with the regulator. In this case, in the ECCU case, we're talking about the ECSRC, which, as you know, Alusha mentioned earlier, has put together some draft rules, a policy framework, if you will, to guide how a crowdfunding initiative will work in the ECCU. Then we look at the entrepreneurs themselves, many of you, hopefully, who will be interested in raising funds via the platform and will prepare their campaigns. Now, obviously, this will involve perhaps using accountants and lawyers to help with this process. And it will involve a certain measure of training to understand how crowdfunding works, what are the pros and cons, how you prepare a campaign, what's involved, and so forth. And then we have the investors who will be providing the funding to the businesses on the platform. And they also would need some measure of training on understanding not only the risks involved, but the fact that the funding has to be left with the companies for some years. In other words, this is not a speculation or a speculated play. Investors, by putting money behind companies, are really pledging to walk with them as they grow. And then we have the investment advisors and brokers who also have a very important role to play here, in the sense that they will be advising the investors in terms of investment limits, the risks involved, and other rules of the game, so to speak, that would impact them. And then finally, we have the crowdfunding platforms, where they will be the ones who are hosting these fundraising efforts. And these platforms will be subject to certain rules and regulations, which Tom will go into later. So essentially then, the success of any crowdfunding effort, specifically in this case, an equity crowdfunding effort, stands really on the shoulders of the key players that I've outlined here and how they work together and their understanding of the rules of the game. Let me just talk a little bit now about advantages and disadvantages of equity crowdfunding. First of all, from the point of view of the business, it's a faster way to raise investment capital. It's less complicated than conventional equity financing. And in some instances, companies might be more comfortable raising money this way than going to a commercial bank. It also provides exposure to a larger number of investors, as opposed to focusing on, say, one or two angel investors, as in conventional equity financing. You're being exposed via the platform to many, many more investors who admittedly will be providing small amounts of money, but essentially, and this comes to my third point, it increases visibility across the board for the company and what you're doing. And in many cases where in particular you are trying to develop a new service or product, it can really create a loyal following behind that product. Also, and this relates specifically to early stage and startups, this is a good approach for startups and those trying to test new ideas, because again, you can basically essentially gauge interest in this new product or service by the response you're getting to your campaign. From the point of view of the investor, it enables non-accredited investors to invest, which means you're democratizing access to finance or access to investment on the part of the public. Before crowdfunding was launched, and I'm thinking of the United States as an example, only so-called accredited investors with a certain income level could invest legally. So crowdfunding, equity crowdfunding rather, opens the gate to a broader range of investors to participate in this kind of investment. Also, from the point of view of the investor, it creates a diversified portfolio, meaning that this is another instrument you can add, so to speak, to your portfolio. But there are also risks, like most things in life. And so I wanted to just highlight a few of these. On the part of the business, it's important to note that you have to do some work in order to build momentum for a successful raise. So you can't just post your campaign, you have to do a little bit of work behind it. So that could be seen as a risk, because if you don't have clients before you raise funds on the platform, then it might be a heavy lift to really build momentum for that raise. Also, depending on how ready you are in terms of your financials, your operations, and so on, it could be quite a significant investment of time to actually put a campaign together. Because as I mentioned earlier, you might have to draw on the assistance of lawyers and accountants to do this. The other thing to note also from the point of view of an entrepreneur is that if you don't raise the target amount that you've indicated in your campaign, if that amount is not achieved, then no money is transferred to your company. So obviously, when you post your campaign, pledges will come in from individuals in terms of how much money they're willing to commit, right? When you close a campaign, those monies are transferred to the company. If, for example, you set a target of $50,000 and you raise 20, according to the rules of the platform and the rules of the game, you're not getting any funds. And that makes sense, because if you are going to say you need working capital to do X, Y, and Z in your offering document on the platform, it really, if you raise less than the amount, the target, then you would not be able to actually fulfill those goals. So it might sound a little harsh, but it's really a more practical rationale for why only partial amounts of the raise are not transferred to the businesses. And then finally, from the point of view of the company as well, this could be expensive given the level of preparation that you might need to make. And this varies, of course, from company to company. On the investor side, as with any investment, you stand a chance of losing money. And so this is an important consideration. I mean, there are going to be limits placed on income limits in terms of how much funds investors have to have before they can actually invest. And this is true across the board with any equity crowdfunding platform. The other issue from the investor standpoint is that because there are many investors involved in the average raise on the platform, investors are getting really very small numbers of shares. So really, they don't have control in terms of how the companies run. And this is in contrast to traditional equity investment where you have a smaller number of investors putting in larger amounts of money. And because of that, they may be entitled to board seats, etc. So they would have more direct control of how the company is operated. Also, there's a lack of liquidity from the investor standpoint, meaning that the money has to be parked with that company for a period of years. And so investors have to be prepared for that. And then there's also the risk of investment dilution, meaning that investor shares might be worth less if the company scales successfully with that first round of crowdfunding funds, and they go on to raise money from, say, angel investors. Those investors might negotiate in such a way that the value of the shares of the original equity crowdfunding investors is less than they would like. So that is also an important consideration to bear in mind. With that, I'm just going to touch very, very briefly on the crowdfunding project. Alusha has mentioned the 3 phases, but I just wanted to just hit on a few things. First, the general objectives are really consistent with the goals of all the governments in the ECCU, which is to really develop the capital markets, promote a deepening by increasing participation of 2 key players in the system, the investors and the small businesses across the board. And of course, the specific objective is to really increase significantly access to finance for small businesses by opening up another financing instrument to complement traditional commercial bank loans. The key elements, of course, as we mentioned earlier, the validation of the policy framework developed by the ECSRC. And this is where your viewpoint is particularly critical today, because we'd like to get your take, particularly on some of the elements, the rules that relate directly to businesses. The sensitization and training component is also very important. And as Alusha said, I'll be leading that, because in order to engage effectively in this new initiative, all stakeholders really need to be clearly aware of what crowdfunding is, what it isn't, and to really go into this process with their eyes wide open, so to speak, in terms of the risks and the benefits. And then finally, the testing of the crowdfunding platform is really a way to provide would-be businesses who want to establish platforms to be able to test their product or their prototype within a safe space, bearing in mind the rules of the game that have been developed by the ECSRC. So with that, I'm going to turn over to my colleague, Tom, who will talk now about the draft rules and specifically zeroing in on elements that relate to businesses. Over to you, Tom.
Thank you. Thanks, Dr. Leslie. Real pleasure to virtually meet you all today. Thank you very much for joining this session. It's great to see so many people here, and this really interesting getting your feedback in terms of what we're currently proposing in terms of the draft rules. So hopefully some of you will have reviewed them and really keen on your comments. But I'll give a brief overview, and then we can kick off the discussion. So as a very sort of high-level summary, we've developed these rules to provide a regulatory framework for equity crowdfunding to take place, providing what we hope are proportionate requirements and responsibilities for the equity crowdfunding platforms and for companies and businesses like many of yourselves who are looking to raise capital through them, but while also putting in place appropriate investor protections to ensure that ordinary retail customers, as well as investment professionals who are looking to invest, fully understand the risks and can make appropriate decisions about what they may want to invest in. So Winston, if you want to go to the next slide, please. Thank you. This just provides a quick overview of the key elements. I'll go through them in more detail shortly, but the first of which is that we're looking to introduce a new regulated activity to allow crowdfunding intermediaries to become authorized by the Commission to launch online portals to facilitate this activity. We see these as potential investors will register with a portal and open accounts with the intermediary, to allow them to view investment opportunities available to them, and to make investments in return for equity in the issuer's business. And as you'd probably expect, we propose that the authorization of these new crowdfunding intermediaries will be dependent on various regulatory standards. I won't go into them in detail for this session, but there'll be various stipulations that the Commission will make in terms of having a certain amount of capital, having appropriate business continuity plans, and various conduct of business standards. Equity crowdfunding transactions will provide an exemption from the normal securities laws that govern the issuance of listed securities, and these will be considered private placements. Yeah, I think we recognise, and I'm sure many of you on the call will recognise, that the full suite of securities laws can be burdensome and create undue barriers for early stage companies. So we're looking to disapply those and create a bespoke framework to facilitate this activity. And investor protection is obviously critical as well in this. So as Winsome talked about, there's a big education piece we need to do, but we also, within this regulatory framework, are looking to introduce various safeguards to ensure that investors are protected. For example, to ensure that investors fully understand the potential risks and benefits, and to ensure that particularly retail investors don't expose themselves inappropriately to the risks of equity crowdfunding that Dr. Leslie has spoke about. And finally, we also plan to introduce a regulatory sandbox to allow prospective platforms to test their portal with real consumers in the live market, which will hopefully allow firms to come to market potentially more quickly and more easily, and also allow the Commission and other stakeholders to really understand how these rules work in reality in the market. And just to emphasize that we are seeking to be proportionate here, and there are clearly trade-offs between the regulatory obligations and ensuring that we don't sort of inappropriately stifle the market or create barriers for any of the players in this ecosystem to participate. That's really what I want to get your feedback on today, about ensuring that we're getting that balance broadly right. So just very briefly, the key issues for crowdfunding platforms. So the next 3 slides are going to break this ecosystem down into 3 players. We have the crowdfunding platforms, we have the investors, and then finally, and most relevantly, I think for this audience, will be the businesses seeking to raise capital via these platforms. So just to briefly touch on the obligations for crowdfunding platforms, and the rules that we've introduced primarily affect and regulate the platforms themselves. So these are companies that we hope will be interested in entering the market to intermediate and facilitate crowdfunding transactions via the development of online portals. So as I said before, they would need to be authorized by the Commission, and we'd expect once authorized, they'll create these online spaces to allow businesses to promote their business, launch a campaign, give the opportunity to tell a compelling story about their business, and detail the specific investment opportunity they want investment in. And this is likely to include things like a pitch deck or other promotional material. And we expect these platforms to have in place online community discussions to allow actual and prospective investors to interact with each other and to the businesses looking to raise capital. We're also very keen that the platforms are not offering investment advice. So we want to make sure that they display the various investment opportunities in an unbiased and objective way, allowing the prospective investor to log on and filter and sort the various opportunities that may be available to them. So we're keen that the platforms don't highlight particular offerings or do anything in a way that might lead people to think they're giving investment advice. And we're really clear that they should not be giving investment advice. We'd expect that the intermediary conduct a certain amount of due diligence on each potential issuer that is looking to raise funds on the platform. And this is something that maybe we can explore with this group, because I think it's important that these platforms do a degree of due diligence on the businesses that they accept on the platform, act as a bit of a gatekeeper, So, for example, the draft rules propose that they should conduct a reasonable degree of background checks, for example, satisfying anti-money laundering requirements to ensure the management of the issuer, the business is fit and proper, to conduct an assessment of the credit worthiness of the business, and to ensure that the business has a suitable shareholder register in place in order to track the investors that are investing in the equity of that company. And we'd also anticipate that the extent of the due diligence conducted by the platform on the business is disclosed on the platform and to potential investors. Just a couple of final points. We'd expect the intermediary to be principally remunerated by charging fees or commissions to the issuer who is looking to raise funds on the platform. We don't set any stipulations about these, but they clearly should be fair and they should be clearly disclosed to potential investors. And finally, the proceeds of the offer and sale of the equity should be tracked by the crowdfunding intermediary. The investor funds can either be transmitted directly to the business, the issuer, or the rules also allow the intermediary to hold investor funds, provided that they're properly segregated. And if for any reason, as Winsome said, that there may be reasons why an offering doesn't complete, in those cases, the intermediary is responsible for returning the funds to the investors. So if we just skip to the next slide, I'll just briefly talk about some of the key issues for investors and investor protection. Thanks, Winsome. So we're looking to ensure that every type of investor has the opportunity to participate in a crowdfunding offering. As Winsome said, this is designed to be a democratization of equity investment. So I think it's fair to say that around the world, equity crowdfunding generally attracts retail investors with, I think, relatively small amounts to invest in a particular business proposition. And there are lots of examples where these small amounts can aggregate up to a significant amount of capital for the business. And given the expected interest then from retail investors, we propose to introduce investment limits on retail investors based on their income or net worth to ensure they're not exposed to undue risk. These are detailed in the draft rules, but just as a summary, so for investors with relatively modest annual incomes up to 100,000 Eastern Caribbean dollars, we're proposing an investment limit of up to 5% of that total annual income. And these investment limits are increase dependent on the net worth of the investor or the annual income that they may have. These limits don't apply to accredited investors, so such as very high net worth individuals, corporations, or public authorities. So for these, we don't anticipate introducing any investment limits that they can raise. We think these are important, though, protections for ordinary retail investors. Another key aspect of investor protection is disclosures. So we're looking to standardize key investor disclosures before an investment is made. So, for example, requiring the same information for each investment opportunity to be contained in an offering document, requiring the same key information about a business and its offering. And we think it's important this is standardized so that prospective investors can easily compare different opportunities. And we also want to introduce standardized risk warnings of a general nature about the risks of equity investing, as Dr. Leslie has detailed earlier. So if we can just quickly move on to the last slide, Dr. Leslie, thank you. So I guess this is the real meat of it and the real impact, I think, for the people on this call. So the issues for entrepreneurs and businesses who are looking to raise money via this route. As we said before, these rules look to primarily facilitate capital raising from smaller businesses incorporated in the ECCU. So that, those businesses who are not yet ready to launch on a listed market and are looking for early stage capital, startup capital, seed capital in order to grow their business. And we'd expect certain things from these businesses in order to participate in equity crowdfunding. So businesses should have a clear business operation and plan to operate such a business with the proceeds raised through the portal. We'd expect that, as I alluded to before, we expect the platforms to conduct some degree of due diligence about each business looking to raise funds on their platform. So we'd expect certain information to be provided to the platform in order for them to do that. So, for example, key financials and business plans and business propositions and things like that. And entrepreneurs will not be permitted to raise funds on a platform if they've been declared insolvent or engaged in any wrongdoing or fraudulent behavior in the last 5 years, which I think, you know, we'd all agree is probably a sensible safeguard. One of the key provisions, which I'd be really interested in your feedback on, is we're looking to cap the total amount of investment that a business can raise via equity crowdfunding. We currently propose that each individual issuer does not exceed 5 million East Caribbean dollars within a 12-month period. Excuse me. As I say, this is designed for smaller businesses that are not potentially ready to list. So we think 5 million East Caribbean dollars is a sensible limit, but again, really interested in getting the feedback from market participants about whether that is a sensible limit, or does it create any potential barriers to your sort of participation in this. And as I said before, I think clear disclosures are one of the key safeguards here. So I think it's very important to provide the right level of information to enable investors to make informed choices about which businesses they may want to invest in. So we'd expect each company that is looking to raise funds clearly detail their most recent financial statements, the valuation of the business and how they've determined that valuation, the current borrowing levels the business may have and the source of that borrowing, how much funding clearly is being sought is very important, and how those funds will be used. We'll need that clearly articulating before investment commitments can be made. And as we've said, we want to standardize this information as far as possible. So we want to produce an offering document that all businesses will be obliged to complete, detailing a lot of these factors. So their business plan, their financial details, the key risks the business has identified in terms of their business, how it plans to use the proceeds, various core and key information that you'd expect would be helpful for an investor in order to make an informed judgment about whether to invest or not. As we've said, there'll be for each opportunity, there'll be a target amount of capital that a business will want to raise. If it doesn't reach that target amount, then the intermediary will be responsible for refunding any investment commitments that have been made to investors. Issuers will also be responsible for keeping a shareholder register to record ownership of shares raised via equity crowdfunding. And finally, although the rules don't prohibit the resale of securities, but they don't include detailed provisions around a secondary market. And it's hoped, I think, that some businesses will, that are successful in raising capital via equity crowdfunding will successfully graduate to the ECSRC and become listed businesses. I think that'll be a fantastic sort of success story for what we're trying to do here. So I've talked for far too long. So just to sum up, we've tried to design a proportionate regulatory framework here, one that seeks to promote this activity in a prudent way while putting in place various safeguards. And now really interested in the feedback you might have to this, both in terms of more general in terms of what you're looking for out of this project. Have we raised any sort of concerns that you may have? But also any specifics about the draft rules, any specifics about the limits of capital we're proposing here, anything that might negatively affect your interest in raising capital via equity crowdfunding, and just your reflections in general. So with that, I'll hand back to Alicia, and we'll start the discussion.
Yes, good. Thank you, Winsome and Tom. Very succinct but comprehensive nonetheless. And just to remind persons that you can place your questions in the chat, or please use the raise hand feature if you have a question that you would want to articulate. Just checking the chat, and we have 3 questions so far. The first one is, are the investment advisors, brokers mandatory, or can investors participate directly on the crowdfunding platform?
So investors can participate directly on the crowdfunding platform. So one of the key things we're trying to do here is to allow retail investors to invest in startup companies. So yeah, to answer your question, all investors are potentially able to participate. It's not just through an advisor or a broker.
Thanks, Tom. The second question, can these presentations be shared with our various ministries of foreign affairs to reach the diaspora affairs departments? Some of the potential investors may be based in the diaspora. Also, have you considered hosting these presentations at a different time, perhaps late evenings or nights? Maybe I can answer that one. The presentations and the recordings of these sessions, we're having three sessions this week. They will be placed on the crowdfunding website, the ECSRC crowdfunding website. And in terms of hosting the sessions at a later date, that's something we can discuss with the consultants to see whether that would be, what we can accommodate as it relates to that. But the other thing as well is we want to also let you know that we are engaging with media houses in various countries in the ECCU, and having interviews on the media, and we will be hosting a live panel discussion sometime later over the next few weeks to speak about the project again. So in addition to hosting these sessions, we will be having media engagements to bring the information to the population in the ECCU, and hopefully we can reach the diaspora through the member governments. The next question, wouldn't it be necessary for the platforms and issuers, regulated businesses, having to comply with local existing AML laws, along with complying with the due diligence that is outlined in the proposed legislation? You got that one, Tom?
Yeah, so the short answer is yes, they would have to. I gave a brief summary, but we clearly state in the draft legislation that existing AML and CFT legislation needs to be followed. The legislation doesn't disapply any laws around anti-money laundering or counter-terrorist financing that would need to be in place. So absolutely, and maybe I could take Ms. Morton Campbell's question as well in terms of EKYC. So we don't talk in the rules about how a firm should know its customer or what mechanisms they should use to do that. I think it's probably up to the platform itself to work out how they comply with AML and CFT legislation. But clearly, a route that many platforms have gone down is an EKYC, a sort of an outsourced EKYC solution, which I know have worked well. But I think that would be for the platforms to decide upon rather than the regulator to provide any sort of steer about.
Right, and just to add as well, Tom, that we as the regulator would be able to monitor this in the sandbox with the platform. So these are the things that we would be looking at as part of the product testing of the platforms. The next question is, what are the average user fees like for participating on the platform for both investor and businesses? There are no fees stipulated. We are hoping that the platforms can set their fees and that they will be reasonable. So at this point, the regulator will not be the ones setting the fees. However, if we think that, based on our assessment that, the fees become prohibitive, then we may have to step in. But that is something that we will let the market determine.
And just to add to that, Alicia, I completely agree with that. But I would also say that typically you'll find that the fees are charged on the business rather than the investor. So typically an investor, there wouldn't be any additional fees coming from the platform. But again, that'll be a matter, I guess, for the market to determine, how a platform may want to compensate itself.
Okay, so there are no more questions in the chat. It seems that our presentations were very clear on the matters. I'm not sure, Tom, whether you'd want to, go through those discussion questions that we had just to spur some feedback on those specific areas that we would have identified. Or
yeah, I mean,
this group.
Yeah, I mean, I guess my main question, and it's probably quite general, but just, is there anything that I've said or Dr. Leslie has said about how we foresee this operating in the East Caribbean that raises any concerns or any potential barriers to you as a business looking to raise capital via this way? So, we've put in place limits in terms of the amount of capital that a business may raise in the course of a 12-month period. We've also put in place limits on how much a retail investor can invest, how much of their income they can invest. Do those seem reasonable, or would there be any concerns? And maybe there's not, which is great. And I'm certainly not trying to create concerns where there may not be. But that will be very, very useful feedback.
Okay, so we have one question. How can I invite you to speak directly to the SVG Small Business Association about this amazing project, close to 200 small businesses? Just in response to that, myself and Dr. Leslie would have conducted an interview with Mr. Tony Regisford for his program, Let's Get Down to Business. So that is available for viewing. However, we are open to doing a presentation for the Small Business Association in St. Vincent. So Dr. Leslie and Tom.
No, absolutely. Absolutely. I think we have to get the word out to as broad a group of folks as possible. Because I suspect part of the reason why we're not getting many more questions is that there needs to be a little bit more of a deep dive into what are some of the things, maybe walking through the process so that firms can see whether this is something that would be suitable for them. I mean, so perhaps this is not the place to do that, but I think we might want to consider perhaps more dedicated, as the speaker, as the participant said, more discrete, smaller groupings of folks to sort of maybe do a slightly different format, perhaps. But certainly I'm open to presenting to another group.
Okay, so Petal, you had a question? You said you had a general question?
Hi, good day, everyone.
Mm-hmm.
Just in general, the presentation was very good, very useful in terms of providing everyone with a general understanding of what crowdfunding entails. The reason why I'm speaking and not typing in the boxes is that it's a pretty long question, so I think it's more effective that I speak. So in terms of raising funds for small businesses, I'm just looking at the general impact in terms of complying with regulations would have for a medium to small business, because from the general discussion, it seems that perhaps these small businesses would have to have a compliance officer perhaps in place so that they comply with the local AML safety regulations, perhaps having an internal auditor, perhaps reaching out to someone to be able to reach the point where they offer to the public itself. So just in general, it seems that it could be onerous for a small business in terms of raising the capital, in terms of having that infrastructure. What kind of talks have you had about that in terms of small businesses and how they'll be able to participate, knowing the supportive network that they'll have to have behind them?
All right. So Dr. Leslie, you want to take that one?
I think that's a very good question. It's interesting because something similar was raised yesterday, but more specific about technology transfer. I think you should see this effort as a process. We're looking at this project and certainly positioning it as a pilot. But we recognize that, you know, putting a policy framework in place, testing platforms in a sandbox scenario, and sort of doing preliminary awareness raising and some elements of training are not enough. So there's going to have to be, in order to build out the ecosystem, I know I touched on several key players, but I didn't mention the capacity building aspect that has to take place. And I think ultimately there's going to have to be, or let me back up, let me say this. You mentioned having a compliance officer in each company and so on. I don't think that's practical. I think we're going to have to create a situation, and of course this is outside the scope of what the ECSRC can do, but there needs to be perhaps a suite of services or individuals that offer services around compliance, around accounting, around legal, et cetera, to provide these services to firms that are good candidates for this, but might not have those elements in place. So I think there's going to have to be a second stage of this, which creates the support system and the support network to allow firms with good ideas and that have strong potential for scaling via this kind of financing to get the assistance to enable them to actually list successfully on a platform. If that answers your question.
Yes, it does. Thanks.
Mm-hmm.
Thank you. And just to let persons know, you can also raise your hand if you want to ask your questions. I see some very long questions in the chat. So of course you can please also use your microphone. So we have a question. Do you have any examples of the typical business that has accessed such funding, and how successful have they been? Dr. Leslie, do you know of any?
Not directly. I know, okay, let me say this. There is a crowdfunding platform in the Bahamas. And as I might have mentioned, crowdfunding is a pretty new concept here in the region, even though it's been going on for a number of years elsewhere, globally. RWAC-X is a platform that was launched in Bahamas about 1.5 years ago. They have a number of companies listed on that platform now, and one of them, I think it's a technology company, was successful in doing an issuance and getting funding. But again, this is early days in the Caribbean, and as the World Bank said recently in a report, great idea for the region, but some of the elements are not yet in place. So this speaks to the previous question that we had about setting up a framework that provides assistance to companies to enable them to list. But yeah, I mean, the examples so far, there are a number of examples of nonprofits on the social exchange in Jamaica, which have received funding. And the idea behind the social exchange is to have a second exchange, if you will, in an impact investing exchange, which will hopefully move those companies that have been successful securing donations to an impact investing play. But again, it's early days. The process has been relatively slow so far because, again, in the Jamaica's case, they have to do legislation to allow impact investing to take place, this kind of thing. So there are not a lot of examples in the Caribbean of companies that have successfully raised funds. However, in the US case, there are many instances. There's a company now, Ocular, I think they're called. They do these, what's it called? The alternative reality headsets. And when they were testing their product, they did a reward play that says, you know, if you fund us in building out this prototype, we will give you a free headset. They made a lot of money, and there are a lot of very happy customers now who had free headsets. So it is possible to do it successfully, but of course you have to have the framework in place and the support structure in place to really make it successful, both not only for the companies on the one hand, but the investors on the other.
I just add to that, if I may, just looking at jurisdictions around the world that have implemented equity crowdfunding regulations, there's a vast sweep of different approaches to how jurisdictions do or do not regulate equity crowdfunding. I think in jurisdictions, and I would say this because I've tried to help with drafting the rules here, where there's clear and bespoke regulation that is proportionate and doesn't place an undue burden on any of the actors in the system. You see very successful portals being developed, and you do see a lot of firms using those portals in terms of raising capital in this way. There are plenty of examples around the world where actually regulation has inhibited it, whether by design or whether unintended. But I think regulation is a really, really important play. And there are lots of examples where you get the regulatory framework right, it does promote the market, and it does allow firms to raise capital in this way and allow investors to invest.
Yeah, I think the reason why this project is so important, I think, is that, to my mind, it creates a very good alternative to conventional equity investing. And certainly it's very well suited to the Eastern Caribbean with small markets, smaller companies, etc. But having said that, you know, a lot of things have to fall into place. And as Tom says, the regulatory aspect is very important, but we have to get it right so that we're promoting rather than inhibiting the development of this financing instrument. And I think it's particularly important at this juncture because the financing gap for small businesses, micro and small businesses in the Caribbean, is quite large and significant. And so under the best of circumstances, conventional sources through commercial banks and credit unions and so on is not going to satisfy that demand. So we have to find more creative ways and certainly ways that are being used successfully elsewhere in the world to bring them into the Caribbean. But having said that, we have to be mindful that the companies that would be interested might not be ready to really successfully list. So we have to find ways to do that through regulation, capacity building, advisory services, and so on.
Thank you, Dr. Leslie and Tom. We can move to the next question. What would you estimate is the readiness level of the MSME sector to take advantage of this initiative? Do you think more readiness sensitization meetings would be necessary?
I think there might be a few, not might, but I think there are a few companies that are ready in the sense that they're scalable, they have good ideas, they have a growth path. But I think in terms of preparation to actually successfully list on a platform, I think the capacity building piece is going to be very important across the board. And so I would say not only sensitization, but also training, first around equity investing and what it means, the pros and cons, etc., the process, which is important. So equity investing as a concept needs to be actually taught in the region. And then secondly, we need to zero in specifically on equity crowdfunding and how it differs from say angel investing or venture capital or private equity, and then talk about how do you operationalize an issue? What are the steps you have to take to actually prepare to post your campaign on a platform? So I think there's a lot of work that needs to happen at that level. But I do believe there are companies that when you look at them in terms of their business model, their innovation, and the kinds of the path that they want to take in terms of scaling, that we do have companies in the region that could be candidates for this already.
Thank you. Thank you. And we have a two-part question. The first one is, some regulators in various jurisdictions have been requesting that eKYC solution providers are regulated. Will this be a requirement? And the second, will platform providers be required to submit annual audit reports to users? Tom? You want to tackle that one?
Thought you might come to me. So these are great questions. So on the first one, so the draft rules we're proposing here don't talk to how AML and CFT requirements are done. They just provide a high level obligation on intermediaries to ensure that they are done. Alusha may be better placed to talk about the prospect of regulating or not eKYC solutions in terms of the jurisdictions here. But the draft rules here don't sort of touch on that at all. It's the obligation is on the intermediary to ensure that AML and CFT obligations are met. How they do that is up to them. But Alusha, you may want to say more on that. Or just on number two,
Right.
Will platform providers be required to submit annual audit reports to users? So no, they won't. They have obligations to submit an annual report to the Commission, but we're not proposing to users. It's a good point. I might want to think about, I think, but not currently in the draft rules. But it's an interesting point.
Yeah. Thanks, Tom. And on the matter of the regulating the eKYC solution providers, although the ECSRC is not listed as an AML CFT regulator in the jurisdiction, we would want to have some sort of discussion or collaboration with the KYC regulator, the AML CFT regulator, to determine what sort of approach we should take in relation to that. So that is a good question, and that's something that we will take. We've noted for further review and assessment. Okay, so there are no more questions in the chat. I don't see. Victor Elliott had a comment. I don't know if do you want to speak on your comment? You didn't really have a question though.
Yeah, it's not really a question,
Right.
as much as a comment. I think one of the challenges that I think you would have, having read the rules and the requirements that issuers will have to comply with, I think the biggest challenge that you would have in any event is the service providers, just in general, that you would need to put together these offerings and to comply just generally with providing accounts and that sort of thing. It's been my experience that, you would think that, providing annual accounts is a simple task. But when you don't have that many accountants that are able to do it. And there are already a lot of businesses and regulations now that kind of require that, which have already kind of put pressure on existing accountants and firms to produce reports for companies on just simply for regulatory purposes. That within an investment environment, placing those requirements. I think there should be some flexibility in terms of the timelines in which those requirements are supposed to be done. Because just quite simply, you may run into a problem where you don't have enough service providers to adequately assist companies with complying with these regulations. That's just it's just more of a comment rather than a question per se.
Just thanks for that, Victor. Just to add that there's some in the rules, do they require, I don't believe require the submission of audited accounts. So, you know, they right.
But they
so
require accounts.
yes.
And practically, I mean, certainly in my experience, most small businesses do not have internal accounting systems, or they're fairly rudimentary. And typically their accounts, even if they're not audited, are usually done by external accountants. And so I think that's it in terms of the actual production of financial statements.
Right.
Even if they aren't audited, they're done by external accountants. And so that's why so that's just the point that I think should be borne in mind.
Yeah, Dr. Leslie, you wanted to?
No, I'm just saying that if a company is if an accountant is producing accounts for a company, audited or no, there's a standard format, right? So I would assume that that would satisfy the requirements for this project as well. In other words, have the same documents could be used in this case as well, because those accounts follow standard, the standard components and so on in those documents.
And also just to mention that there is going to be an educational aspect of this program, and the ECSRC is also looking to partner with other regional organizations that are engaged in projects that will assist small businesses in, you know, developing their operations and their systems within their own businesses, like the Eastern Caribbean Partial Credit Guarantee Scheme, as well as the OECS that is also engaged in providing some level of you know, capacity building for the MSMEs. So we are that is something that we are cognizant of, and we recognize the need to have and to raise the capacity for some of the businesses, well, for most of the businesses in our jurisdiction, small businesses in our jurisdiction, as it relates to that. There is one more question in the chat. Will these rules affect social fundraising by NGOs, not-for-profit organizations? Just to say that we hadn't contemplated the use of well, as part of the project, this social fundraising as part of the project, but because the ECSRC was really focused on, you know, what is within our purview as a regulator, which is that we are securities regulators. So maybe if that aspect of the project is successful, perhaps like Dr. Leslie is saying, we may have a social exchange or something, you know, coming up that would provide that sort of you know, avenue for NGOs to raise funding. But it's not contemplated under the current arrangement. Okay, thanks, Ava, for your question. Is it too early to consider exit strategies for investors at this point? At what stage do we encourage companies to list on the ECSE?
Well, okay, so let me just throw something out there and then perhaps others can follow. First of all, as I mentioned very quickly in my presentation, I said that investors should not see equity crowdfunding as speculation. So it means that when you're committing to support a company, you're committing, as in conventional equity financing, to 5-7 years, you're committing to park your money with that company, right, and follow their growth. At the moment, and this is raised before, typically an exit from an investment is through the stock market, right? So that's the easiest and probably the best. So we have not contemplated or worked out the timing of exits, or maybe we should not do that. But in any event, this is something that certainly has been raised before. And the issue is, in order to exit an investment, you have to be attractive to the regular market. Now, in the Jamaica case, which is what I know best, there is a very vibrant junior market. At the moment, there is no junior market in the Eastern Caribbean. So it would make sense that these companies would graduate from equity crowdfunding to an angel investment, perhaps, which is a larger amount of money with a narrower, smaller group of investors. And then from an angel investment to the stock market, because when you're going to contemplate the stock market, you have to be a certain size, you have to issue an initial public offering. The company has to really have grown to a certain point. You have established customers, you have years of revenues, et cetera, et cetera. So I think the jump from equity crowdfunding into a stock market environment would be a reach, I think, for many companies. But having said that, I think we've been in discussions with the stock exchange itself to see how we can bridge the gap effectively between crowdfunding, equity crowdfunding, and the exchange itself, to see how we can create a suite of services, support, etc., to move companies from one to the other. But having said that, we're not talking about a short-term play here. We're talking about years.
Great. Thanks, Dr. Leslie. And I see that we have Mr. Trevor Blake, who is the Managing Director of the ECSRC, online with us. And yes, Mr. Blake, please jump in.
Thank you, Ms. Fizal, and good morning to all. I just wanted to indicate, following on from Dr. Leslie's response to that question just now. We do have a lower tier, an entry-level tier market. What we don't have is the incentives as they do in Jamaica, that would really attract the listings on that tier. So that tier is really underperforming. I agree with Dr. Leslie's point that it's quite a jump to move from crowdfunding to a public listing. It is a continuum in terms of moving from angel investing, which crowdfunding is, similar, in nature to a public listing. But over time, we would hope that the necessary development strategies would be there to move companies at that perhaps micro level to be able to benefit from a public listing on that lower tier. Obviously, we have listing requirements for that lower tier, which include firstly, the entity must be a going concern. It must have assets of about $1 million and things like that. So many of the companies that will probably be attracted to this crowdfunding platform may be a little below that threshold, but over time could grow, and we hope certainly, because we are seeing this as one of the initiatives that would sort of feed the pipeline towards the public listings on the ECSRC. Thank you.
Thank you, Mr. Blake. Any comments from follow-up from our consultants? Can we jump in?
I would just also just say that I think some sort of awareness raising about the requirements in terms of listing on the ECSRC would be, so the ECSE would be helpful and something we're thinking about. So in terms of, you know, if we see this as a sort of a first stage or an incubator to becoming a fully listed company, how can we make that journey as smooth as possible for firms, and at least sort of highlight, you know, what the additional requirements would be to become listed? I think that would be a useful way of supporting businesses in this.
Okay, thanks, Tom. I don't see any questions in the chat. Any more questions? And there are no hands raised. So it looks like we'll have an early day today. It's 11:30. We had intended to go till midday, but if there are no more questions, we just give persons just a few minutes to gather their thoughts again, just in case. All right, so we will go to our consultants just for their final comments. There's one question. Is there a target date for implementation? I can answer that. The project is set to be completed by next year, June. And so we're hoping that once we've implemented, we will be at that point able to admit a crowdfunding platform for testing in the regulatory sandbox. And then following that, we would be, you know, finalizing, have the rules already finalized and implemented. But what we see this project being, it's going to be something that has to be ongoing in terms of the education and awareness raising, so that it can be successful. So the ECSRC will intend to continue, you know, to have some level of public engagement as part, even after we've completed in June next year, so that we can continue to make sure that you know, the persons are aware of this project, and that you know, they can participate. One of the questions, the comments that came in, and that I think it's very important for us to take note of as well, is the need to advertise in the diaspora, because there are lots of, you know, we have a lot of residents, you know, citizens, sorry, who are residents in the diaspora who are itching to be part of the economic development in the countries, and I think this is an avenue that will provide that opportunity for them to be able to support small businesses and the economic development of their countries in the region. Okay, so thank you for your questions, and I'll just ask Dr. Leslie or Tom if they have anything further that they would want to add before we close for today.
Well, I'd just like to thank everyone again for coming. I think this has been a really good discussion. The questions have all been on point. I just want to say that and urge folks on the call, or in this meeting rather, to reach out with any additional questions directly to the ECSRC through the website, and give us your feedback, because this is very much a work in progress. Thank you so much.
Thank you. Thanks, Dr. Leslie. And Tom, any comments? to
No, I
add?
mean, just to reiterate what Dr. Leslie just said, that, you know, all this feedback has been incredibly useful, and appreciate, you know, this might not be the right vehicle for everybody to give feedback, and if, you know, an email, or, you know, you want to talk to me about the rules, or you know, however it works, really keen to get this input, and thank you for your input today. Think, you know, some of the comments, Mr. Elliot Hamilton's comment about, you know, the sort of the burdens that you can potentially place on business support organizations and accountants and lawyers through this. We've really tried in the rules to make the obligations for businesses as high level and as proportionate as we possibly can, while recognizing, I think there are certain key things that any investor would be expected to know about a company that they're looking to invest in. So we've tried to make this as straightforward and easy as possible. And I think there's been some very helpful challenges here that you've identified, some of which you know, may not be actually in the Commission's direct gift to solve, but things that we're absolutely heard of loud and clear. And I think through the awareness raising, through the capacity building, you know, I'd be delighted to talk at other fora about this. You know, hopefully we'll get there. But thank you very much for your feedback, and yeah, it's been a pleasure talking to you all.
Great, thanks, Tom and Winsome. And we want to say thanks to all those who participated, who are on the call today. And as Tom indicated, your comments have been very useful, and we will be taking those on board as we move forward to finalize the rules for crowdfunding. And we look forward to meeting with you again at some point as we continue our education and sensitization efforts. So thank you, everyone. And just before I go, the email address to send your comments has been placed in the chat. It's info@ecsrconline.org. info@ecsrconline.org. So please feel free to send us any additional comments you may have had after you've had a chance to digest the rules, the draft rules, and we look forward to hearing from you as we work towards the implementation of this framework. That is something that will be beneficial to our ECCU region. Thank you very much again for your participation.